Welcome to Long Story Short, a podcast where two financial advisors, one rooted in financial planning, the other in investment strategy, break down the questions we're actually hearing from our clients. Each episode, we tackle one or two real-world issues that matter to high-net-worth individuals, from market-moving news to personal finance decisions with lasting impact. No jargon, no fluff, just clear, thoughtful insights from the front lines of wealth management. We keep it short, but we don't cut corners. This is Long Story Short.
Hi, welcome to Long Story Short. I'm Andy Pratt, and this is Adam Newman. You know, Adam, this is the first time we've done a podcast episode. We've had this idea for a while. We just haven't done it, but I almost think of this as like our pilot episode, so to speak. We'll get all the kinks out. Got me thinking, like, what is your favorite pilot of all time?
Favorite TV show pilot episode? It's got to be Sopranos.
You think it's Sopranos?
It has to be Sopranos. I'm from the Northeast, so there's a local feel to it.
Okay.
And I don't know. I think the Sopranos world is just it's the best. I mean,
Yeah.
look at the characters. You're laughing, you're scared, you're
Okay.
crying. It's a little bit of everything.
Yeah. I mean, that's...
And the acting is A+. I mean,
One of the
you
OGs.
cannot beat the Tony Soprano being like the very first anti-hero, right? Like
Yeah.
he was like
Yeah.
the main
Pretty
character that's a
groundbreaking,
good
wasn't
guy,
it?
but that also is a bad guy.
Yeah.
You know, I think that kicked off a whole new wave in.
That's probably a good
in
answer.
TV.
When I think Sopranos, I think of controversial, like, season finale or series finales.
Yes.
As well, but I think there's reason to debate whether it was good or not. But yeah, the pilot was good. I also think of Lost.
Lost.
I don't know, Lost like grips me, right? It's back on Netflix now. You know, just the scene where Jack, the lead character, opens up and you just see his eyes, and it's just like,
Yeah, Lost
Like,
is
what is
chaos
going
right out of
on?
the gate. You're just immediately you feel uncomfortable. You know, it's just like.
maybe that's like a look inside my soul or something.
Yeah, I don't know.
I love it.
I don't know, but Lost is good. I personally never really got into Lost itself, but I understand it's popular, and it's it's up there, most watched
Yeah.
series of all time.
Well, hopefully we can have a good first season and avoid the fate of a show like Parks and Rec, which was an excellent show, but a terrible first season.
Yeah, I don't know. They said it takes like They said like the first few podcast episodes you do are really awkward. We're probably on track for that, but it takes something like 100 tries or something really significant to get good at it.
Well,
so we just have to keep
Yeah.
going.
We'll have to have a special guest on show 100. But I want to touch, I mean, there's a million podcasts out there these days, it seems like.
Yeah.
Anyone with a microphone is launching one. Why are we doing this?
We certainly have a look inside of a high net worth, the life of a high net worth investor. Being that's who we're advising. So there's a specific cohort of investors that are active in the market, but also worried about planning for their future and taxes and everything else. A busy life that comes along with it. So I think we have a unique perspective. We're not just in the institutional world where we're looking at numbers and charts and data all day. We're not, in the media world. We're not hidden from the actual concerns of what people like living and breathing in the market with their money at work and worried about spending in the future. Need to think about. So I think we want to bring that perspective, right? I mean, I think that's a huge piece of it.
To me, it's like the financial media, right? Like, if it bleeds, it leads. Everything is just drenched in red ink, right? And you get the
You
push
have to sell ad
notifications.
space. You have to sell ad space, and the same people saying, the people. I mean, there's a certain list of, call it doomsayers or perma bears that are out there. They'll say the same scary things over and over again, and they keep bringing them back because when they speak, people want to listen, and they can sell
attention.
ads. So we're going to avoid that. So I think our plan is in each weekly episode to pick a handful of topics that are timely and relevant for high net worth investors that we work very closely with. And so probably since this is our first episode, introductions makes sense, right? In terms of who we are and what we do. So I am the managing partner of Bernie Wealth Management. We certainly focus on portfolio asset allocation and all the investment considerations that come with it, but we're also dealing with things like tax planning, estate planning. How do I go from accumulating wealth to spending it down? How do I go up the mountain and then down in the most efficient way possible? So we kind of live at the intersection of all things related to money and life.
Mm-hmm.
And we can't get through that without the support of our investment management group, which
That's
is
me.
your team.
That's me and my team. Yeah. So my name is Andy Pratt. I've been with Bernie for 13 years now. I think I just had my work anniversary. I can tell who only talks to me on LinkedIn on my work anniversary. I have a few of those.
Yeah.
But I focus on a couple things these days. For one, I'm a portfolio manager looking at our investment strategies. So, that's something that I look at all day, every day. And you're more on the financial planning side. Of course, you can speak investments as well, but that's what I live and breathe every day. And I work directly with clients just like you do. So we kind of hear it firsthand. What are the things that are front of mind for clients? And so, as you mentioned, we're probably going to just talk about 1, 2, 3 things, whatever the current event is, whatever it is we're actually hearing from our clients, because we figure if we're getting questions from you, more people are probably asking those same questions. So the first one we decided to tackle today was world peace.
Or lack thereof.
Right. We don't have the solutions.
Well, I feel like anything geopolitical, it's probably fair to say that any week that we're speaking, there's something happening somewhere in the world that you can point to and be like, I'm a little nervous about that.
Mm-hmm.
But there's weeks where you point to something in the world and say, okay, I'm more than a little bit nervous about that. And I'd say it's fair to say that what's happening with Israel and Iran is probably falls into that camp, where now it's getting the attention of the market. And that,
you could always tell, because CNBC sends the push notification that this thing is causing markets to do, usually go down. Sometimes go up.
Yeah, without a doubt. And so this is a delicate line for us to walk, because whenever there's, whatever the catalyst of it is, when there's something happening involving war and death and potentially us and our troops getting pulled into it, it's like there's it's certainly a sensitivity to it, and you don't want to downplay the human element to what's happening, but our job is to take the market approach to this and say, well, okay, how does this impact markets, the economy, our client portfolios? And we will repeat this essentially every time something like this comes up globally, and that is that the market tends to really not react to geopolitical events. It brushes it off and it looks forward, it looks beyond it. Why? Because most of these things get resolved in one way, shape, or form in a reasonable window of time. And I've got a chart here that I think is a helpful aid in that frame of mind, and it takes a list of, it kind of goes back many, many decades, takes a look at major geopolitical events and what was the S&P 500 return 1 year out from that event occurring. So, and almost all of these, you're positive a year out. So 1 year out from the Korean War, S&P up 11%. One year out from Cuban Missile Crisis, 28% positive. 1 year out from COVID, right, 44%-ish. 1 year out from us invading Iraq, 27% and change. Some other years, like 9/11, the market was down 17% a year out. Ukraine invasion a year out, 8% down, give or take. I think in those two instances, the economy was, kind of rumbling underneath to begin with. On top of that,
right. This is like a classic correlation causation thing.
Yeah, exactly. Right, like not totally because of those events, but negative nonetheless. But you see here, in most instances, it's not that those events cause the market to go in the green a year out. It's just that the market is a very dynamic, large, living, breathing thing, and it's mostly focused on corporate earnings over time, and geopolitical turmoil is not. It takes a lot to throw it off course.
Yeah, that's one of those things, right? I was just talking to a client today about this very topic, and there's always going to be something going on in the world geopolitically, right? I mean, it could be Ukraine, it could be Israel, Middle East relations, right? There's always something going on. What's not on there, I mean, we had some skirmishes between India and Pakistan, right? People talk about Taiwan and China. So there's all this stuff going on that could be a flashpoint, right? And there's just going to always be that risk somewhere.
Always, yeah,
Always.
somewhere. And we just had in April, a 19% sell-off in the market.
Mm-hmm.
So that the timing of this particular world event is interesting in the context of we almost just had a bear market.
Yeah.
Because of tariffs.
Yeah, how do you, it depends on how you define a bear market, right? I think we didn't get there by the official definition, which is the market has to close down 20%.
But really close.
Really
this
close?
was like there's been a lot of near bear markets since World War II, meaning declines that were like 18, 19%, almost 20, but didn't make the full cut.
Right.
And those are incredible to me because you think about when you start hovering around a 20% sell-off, people start getting nervous. Here comes the bear, and then it's like market technicals, whatever it is, just doesn't let you. Someone says timeout. This isn't scary enough.
Yeah.
Go back to where you were before.
Yeah. Although I'll say, I feel like, and there might be some actual data to support this, I feel like people are coming around to when the market sells off like that. You've got you really have three things you can do. You can sell, go to cash, because that feels safe. You can just stay put, right? That's oftentimes the advice that you'll hear from financial advisors. Or you can be really aggressive, and you can add more money to the market. I feel like more and more I'm seeing people in that third bucket, where they're saying, hey, the market sold off, I'm buying it. And the people who do that have been huge winners, right? 2020, you maybe would have suffered some losses in 2022 because the market trended downwards for a pretty long time, but still, we're already, we've recovered from that, and we're only a couple years out from that inflation-fueled bear market. And this current one, where things just happen so fast, right? Like, I never thought I'd see a day where the market goes up 10% in one afternoon, but that's exactly what happened in early April.
That was crazy, by the way. But investors, I'd say the last 15 years, you always see those charts that say, no matter how big the market decline, it always recovers. But I think what investors have become immune to is how long it takes for that recovery normally to happen.
Mm-hmm.
Like the last 15 years, most sell-offs were almost V-shaped recoveries. We've had flat markets for 18-ish months, but if you've aggressively bought the dip since the Great Financial Crisis,
you've hit a grand slam.
So I think people are just programmed to continue to buy that dip, and we haven't had like a brutal secular bear market or like a bear market that's lasted for like many years, where it's like every time you're going to buy, the market just keeps going lower, and you're just beaten down. You're tired of it, and we haven't had that. And I think what you're saying, and I think in general, is people are starting to question what's changed. What is investor psychology improving? Are people more educated now around market dynamics? Or certain vehicles like ETFs, broader based investing, like less speculation? Like is it something of that nature where people are just buying with a longer term lens? I don't know. But we've had 2018 almost a bear market, 2020, 2022, and then I'm gonna put April in that camp because it was almost 20%, but like 4 bear markets in under 10 years. That's pretty wild.
Well, when you consider, this is one of there's one of my favorite finance follows is this behavioral finance expert by the name of Daniel Crosby. He does his own podcast.
Yeah, he's great.
He has a little soundbite that you should expect a correction as frequently as your birthday, because on average you get a 10% or more drawdown in stocks every single year. You can expect that to happen like clockwork. Sometimes they're in a short period of time, right around each other. Sometimes you can go long periods of time where you don't get one, but still, on average, it happens once about every year. And then a bear market about once every 5 years, right? So the fact that we've had,
4
in
8.
Yeah, I mean,
because I'm already hearing again from clients. You're already hearing now. Is the market too frothy? That's how quickly.
Right.
We went from April where it's oh wow, here we go. This is the big decline we've been
Mhm.
waiting for. We're going back down 30, 40%. And then just in a couple months, we've gone from that to we're due for a pullback. We're due for a pullback. And it's like, well, that's
Yeah.
that's a turn.
Well, whenever the stock market starts getting back near all-time highs, people, they don't want to be the sucker, right?
Yeah.
They don't want to be the one who's holding the bag when the bottom fills out, because we're all risk averse by nature. That just goes back to like our psychology, right?
Yeah.
Like we weren't, we evolved in a time when we were, running away from predators on the savannah, right? Like where, staying alive was the most important thing. And if
Yeah.
you took too many risks, well, you
Right.
probably didn't make it till your 35th birthday, right? Or whatever the average life expectancy was back then. And so that's kind of where our brains are.
And our clients, I would say our client base, bringing this back to like the tone of the podcast and like what issues we want to discuss and how we want to relate it to high net worth investors. I mean, I'd say our clients in general are they're willing to take long-term risk, but they're still because you accumulate so much wealth, you need to have some certain level of frugality and
Sure.
like safe-seeking approach to that. Like that same mentality makes you nervous as your portfolio gets big.
Yeah,
and it's
well,
volatile.
right, exactly. And so, when you start seeing those losses, right, you're programmed to feel those losses.
And the dollar
way
side
more.
will. Yeah.
Way more than you are going to enjoy the gains, right? So whenever we get that market going up again, it's just totally natural to think, okay, great. We recovered, that experience was terrible, right? What can I do to protect myself now, right?
Right.
And I think that's human nature. One of my favorite talk about numbers here. The S&P's at like 6,000 right now.
Mm-hmm.
Do you know where it was in 1990?
A 1990, gosh, 1,000? I don't know.
That's a good guess. It's actually lower than that.
800?
350.
300.
That was the level of the
Yeah.
S&P 500 back in
We're
1990.
those guys. We're using points.
Right. Well, but I use points there just to show that the market, you probably were afraid, or investors were probably afraid, from 350 all the way up to where it is now at 6,000.
Right.
There's someone saying
gotta go back down
things
to
are
300.
frothy. Things are frothy, right?
Yeah.
I remember when things were at 350, right? The market can't go back to 350.
Yeah. No. Well, yeah. No.
Look, let's go. And now, one
Yeah.
of my favorite hacks when it comes to thinking about investing is time travel, right? Put yourself in a time capsule and imagine where you are 20 years from now.
Yeah.
And are you more likely to look back at 2025 and say, I wish I'd bought the stock market at 6,000? Or you'll probably wish you could go back to those days.
That's like that Morgan Housel quote. Every past bear market looks like an opportunity, and every future bear market looks like this big scary thing that we don't want anything to do with.
Right.
Yeah, that is real. That is investor psychology to me, in a sentence, and really interesting. But I think this geopolitics, world events, there are certain things that add another layer of concern, on top of investors. And I think anything involving the Middle East, and you start talking about war and just overall impact of what's happening around the globe. It happens when we get there. But so it's another global phenomenon happening now that we have to talk about. It's a T word, tariffs. And if we were having this conversation let's break it this way. If we were talking about this in January, we'd be saying, it's all a negotiation tactic. Nothing's really going to happen.
Mm-hmm.
It's just going to kick around some threats, and then we'll figure it out. Then April 2nd, Liberation Day.
Liberation Day
Was like, whoa, what is happening here?
Yeah.
This is crazy. The
Right.
chart, the big board with the numbers, and
Yep.
people were like,
Yep.
what is this?
Yeah, it was way. The tariffs were much more extreme than people had predicted.
Shock
way
and
more
awe.
extreme.
Yeah, it was just like it was a big deal. And then now here we are a couple months later. What is the pulse? Like what? Those two kind of points in time are really obvious, but what's the pulse on tariffs now?
Yeah, I will maybe get accused of having a hot take here as well, but my read on this is that the tariff story is basically a non-issue for the stock market right now. And the reason I say that is on Liberation Day, the tariffs that were put in place were far more extreme than what any economist was predicting. And the impact of those tariffs, if implemented, was going to be far more extreme than what was priced into the market. So you had the market going, one thing the market hates is uncertainty. And it was like, okay, we have to price in a whole new level of risk here for tariff-related impacts to the global economy. Stocks have to fall, right? But we've seen this playbook over and over and over again from President Trump, where there's going to be a crisis that's created. He's going to use that crisis for negotiation leverage, and then he's going to announce deals along the way. And you may have opinions on, how risky that is, how good the deals are, and all that. I don't really care. I don't think it's even relevant at all to this conversation. But at the end of the day, we saw this with the wall with Mexico. We saw it in negotiations over debt ceilings with Congress. We saw this with trade deals the first go round with China, and in every single case we got to a resolution, right? So I think the market has smartened into that, where the more shock and awe at the beginning, that's kind of the goal, right? And then we're going to have a period of negotiation, and then we're going to have a period where outcomes are announced, right? And I think we're seeing that now.
Yeah.
Where the tariff story really isn't moving the market that much. Like on it, literally April 2nd, huge down day, almost reminiscent of how it was during COVID. What was it, April 9th, 10% up on the 90-day pause news for most of the world, right? We're not seeing that reaction anymore. It's more of a yawn.
Well, how did that play in? Yeah, I agree. But so they got extended, and there's a plan now to talk to China for, they're going to continue conversations with China, and whatever happens, happens. But as we get closer to that deadline, at the end of June, is that what it is? They get extended through the end of the month?
Yeah, and I don't know if you can really say anything's a deadline.
It's just going to get kicked.
Yeah, things keep getting kicked, right? We had the 90-day thing, and then, as long as countries are negotiating in good faith, right, things were extended. So I think that
it'll keep getting extended.
I think that it'll keep getting extended until we get a deal. And honestly, the news, the headlines recently with China have been much more positive than they were initially. The whole rare earths thing was a big sticking point, and that was news, last week, where there was the framework of a deal there.
Well, I think, they've been positive. And I also think we've got, in terms of earnings announcements and what CEOs are saying, I think there was this perception that, leaders of public companies were going to come out and start saying, we're cutting guidance, we have no idea what's going to happen, where stocks would react negatively to this veil of uncertainty that's being perpetuated by CEOs saying, well, we can't give guidance for the rest of the year because we have no idea.
Right.
But I think in general, the tone, even with tariffs as a backdrop, was pretty good. Only a small percentage of companies pulled guidance for the year. Others were more forthcoming about their plans and kind of saying the consumer is still strong, inflation's coming down. Post tariffs, the inflation numbers coming in just surprised.
Yeah, they've surprised, and that's a trend that we saw coming into this, where the inflation numbers were surprising on the downside, and there's some structural reasons for that.
Yeah.
Right. So even if there is an impact, and there's an argument to be made that the effect on tariffs is going to be a little bit lagged, and we're not going to quite see that in the numbers just yet, even with the numbers that we just got. So there is that argument, and I'll caveat there that perhaps the numbers that we get into the summer are going to start showing more of an impact of inflation.
I feel like it was the same thing with COVID, though. And in 2022, it was well, don't worry, it's coming.
Right.
You know what I mean? It was with COVID. There was obviously that's every situation different, but with COVID there was a lot of this. Well, it's going to get worse, next month, and then next month would come, it would be fine. And then in 2022, it's the same thing. The recession is coming. Oh, employment numbers were amazing.
Yeah.
Well, maybe next month they'll be really bad. It just never.
It never materialized. And we could see that same thing here with tariffs. And I think the thing to keep in mind too is what was announced in April that caused the market to react so strongly was these really extreme levels of tariff. And where we are now with what's projected
pulled
is
off of it.
significantly lower, to the point that the market can probably handle that and the economy can handle that
Yeah.
and just keep on trucking along.
And I do not want to get caught market timing this. Like you were saying about April 9th, you see these massive swings up and down. I really can't imagine, and we stress this to clients, right? Like I can't imagine being the one trying to figure out when to get in and out of that
We saw
minute
certain
deadline.
options trading strategies blow up as a result of that, where they're
Right, that's a
the
leverage
type of
problem.
things that like they try to harvest volatility, like right. So low volatility is good, and they can generate returns, and so they got defensive, and then the market blew up 9% in one day, and boom, all of a sudden we're holding the bag on both sides of the trade, right? So you have to be really careful sometimes with the things that you're. I mean, even the pros who do this day in day out can still stumble into this stuff and make mistakes. I think generally speaking, if you're trying to time what's going to happen, it's just so hard to predict what the stock market's going to do.
Well, that's probably a good way to package this conversation up. We've talked about geopolitical events, corrections, the frequency of them, the magnitude, and when to worry, things like that, and tariffs, being a big economic and geopolitical, almost like a hybrid headline. And the name of the game is just, again, the market and the U.S. economy and the global economy, really, for that sake, can continuously surprise to the upside. Companies are resilient, consumers are resilient. We'll have recessions. It's a feature, not a bug. But like long term, we tend to get through these things, and the timing element is just brutal. I can't imagine. You see those charts about being out of the market the best day, best week, best month can really be detrimental to your long term wealth. So I think in this. In long story short, in the podcast, continuing to not just talk about these themes for like trading ideas, but talk about these themes to give historical context and just the reality behind it and what it means. It's
about perspective. Like from our seat as financial advisors, these are the things that we're talking about with clients. These are the messages that we're giving to our clients, right? And I think that's what we want to get out to a broader audience. And so, that's what you can expect from us going forward. I saw on social media, and maybe this is how we can wrap it. Pessimism always sounds smart, and optimism always sounds like a sales pitch.
Yeah.
But in investing, it's the optimists who win.
Yeah. Yeah, I think so. So optimism sounds like a sales. Yeah, I see that. Except for the people selling annuities, the market's gonna tank the next year.
They're selling fear, right?
They sell on fear, but I think a lot of it. I tend to generally agree with that. Invest like an optimist, save like a pessimist.
There you go.
I think that's what our clients do.
Words to live by.
Our clients do a really good job of that, and so that's great. So we're closing, and. You asked me a really good question at the start, and I'm going to counter that question to wrap it up. It's favorite finale, series finale.
Oh, I've got so many bad ones. Like How I Met Your Mother, terrible. I talked about Lost at the beginning. That was terrible. Favorite series finale.
Series finale.
It's so hard to pull that off. A series finale.
You almost can, but you got to pick one.
Yeah. Oh, man. You may have stumped me on this. It's not Game of Thrones. I can tell you that much. That's the worst one of all time.
Yeah.
No, there is a good one. Why am I blanking on it? A show I recently was watching. They really tied it together nicely. Okay, so I'll give you this. It's not a series finale, but it's a season finale. I don't know if you watch what's that TV show where it's based on the video game. Season just happened on Max. You're looking at me like you have no idea what I'm talking about.
I'm watching like home renovation shows right now. I'm so out of tune with like anything remotely interesting on television today, so I don't know. You said it's based on a video game?
Yeah, it's based on a video game. It's this like post-apocalyptic world. There's like a fungus that takes control of people. It's like a zombie thriller.
I have no idea.
Oh my gosh, it really took.
I
thought it was a really good season. You did.
Okay.
Wait, what's yours?
Breaking Bad.
Breaking Bad was great.
It sounds like a cop out a little bit, just because Breaking Bad is a really popular show. But I think the Walter White from like episode 1 to the last episode is the craziest transformation.
That is a great one. I think that's one of the best TV shows of all time.
Well, next time
look at this.
you can stump me.
You're the optimist. I'm the pessimist.
Yes. Yeah, I think that's why we balance each other out. Okay, well, great. So now you have a whole other week, I guess, to come up with a question to stump me.
Let's go. All right.